Good evening, students. Today I am teaching you objectives of taxation. First objective is revenue objective. The main objective of taxation is to raise revenue to meet huge expenditure. The government will impose new tax and will increase the existing rate of tax to get more revenue to finance its activities. Taxation will also affect the economic policy through its impact upon production, consumption, distribution, etc. It is also used to reduce inequality in the distribution of income and wealth. Second objective is regulatory objective. Regulatory means control, to control. Taxation is used to control the production and consumption of harmful commodities. Harmful commodities means those commodities which are not good for our health, like cigarettes, alcohol, etc. There are some taxes to control the production and consumption of these commodities. These commodities such as excise duty, customs duty, etc. Third objective is economic development. Economic development is one of the important objectives of taxation. Capital formation is needed for economic development. The government resort or adopt taxes for developmental purposes such as construction of infrastructural facilities like construction of roads, railways, etc. Proper taxation policy also helps to raise savings income ratio. Fourth objective is full employment. A reasonable rate of tax will lead to an increase in disposable income. The meaning of this, income left after the tax payment. Disposable income means income left after the tax payment, and this will increase the demand for goods and services. Increased demand will increase investment, which in turn will increase income and employment. Fifth objective of taxation is price stability. Taxation can be used to ensure, or we can say to maintain, price stability, stability in the price level. During inflation, the government will increase the rate of existing taxes to control excessive purchasing power, means excess more money. Purchasing power means money in the hands of consumers. Sixth point, or we can say sixth objective, is reduction of inequalities. Taxation is an effective tool to reduce inequalities in the distribution of income and wealth. The government will impose high rate of tax upon luxurious and comforts which are consumed by rich people and take their excessive purchasing power, means more money, and it will redistribute among the poor through the provision of social security measures. Social security measures means provision of free medical facilities, free educational facilities, old age pension, etc. Seventh objective, reduction of balance of payment difficulties. The government will impose high rate of tax upon imports. and it will help to remove deficit in the balance of payment by encouraging domestic production. Deficit means expenditure is more than revenue. So in order to remove this, suppose the imports are more than exports, then there will be deficit in the balance of payment. So how the government is reducing the balance of payment? The government will impose high rate of tax upon imports, so that imports will decrease and it can remove deficit in the balance of payment by encouraging domestic production. Next, canons of taxation. Canons means principles of taxation. Canons of taxation are those principles upon which an ideal tax system should be based. The first four canons are given by the economist Adam Smith. Remaining canons are given by the other economists. First canon, canon of equality. According to him, every person should pay the tax on the basis of their ability to pay and not the same amount. The rich should pay more at a higher rate than the other with persons whose income are less. Second canon is Canon of Certainty. According to Adam Smith, there should be certainty in taxation because uncertainty leads to corruption. It means the tax which each taxpayer is bound to pay should be clear to him. Bound means used to pay. Should be clear to him. It should be clear to every taxpayer as to what, when and where the tax to be paid. Third canon, canon of economy. According to this canon, the cost of collecting a tax should be minimum, should be less. The government has to maintain a simple tax collection machinery with a staff of highly trained personnel with less administrative cost. Fourth canon, canon of convenience. According to this, the time and method of payment of a tax should be convenient to the taxpayer. Convenient means easy to the taxpayer. The tax should be collected at a time when they have sufficient money or income. For example, taxes on land should be collected after the harvest. Fifth canon, canon of productivity. According to this, taxes should bring sufficient revenue to the government. A tax should act as an incentive to production. Incentive means encouragement to production. For example, import duties protect a country's infant industries and domestic output. Import duties, when the government is imposing upon the import will get reduced and it will protect the infant industries of our own country. Infant means beginning stage of an industry. Sixth, canon of elasticity. It suggests that taxation should be flexible. The tax revenue of the government should expand or contract with the national income. Seventh, canon of simplicity. Flexible means changeable. The tax system should be simple and plain to the taxpayer. It should be simple to understand as to how it is to be calculated and how much is to be paid. Eighth canon, canon of flexibility. Flexibility means that there should be no rigidity in taxation. The tax system can be changed to meet the revenue requirements of the government. 9. Canon of diversity. It implies that there should be a multiple tax system of diverse nature rather than having a single tax system. There should be a variety of taxes so that all people can contribute to the government or to the state revenue according to their ability to pay. But it is uneconomical due to difficulty in administration. Thus, there are 9 canons of taxation and 7 objectives of taxation. Thank you, students.